Welcome once again to another Agriculture Today here on the K-State Radio Network. Glad to have you along. The grain market's in review now with Dan O'Brien aboard from his office in Colby, Northwest Kansas, research and extension grain market economist for K-State. Dan, we can put it this way. The markets appear to have embraced the reality that there will be no short crops in the U.S. production this year. Now, that can, of course, change some, but it sounds like most of the major row crops are off to a solid, if not terrific, start.
We've seen this in a number of years in the last decade or so, where if we get into mid-June, crops planted, things are up, going well, we start to see weakness in the futures markets, particularly new crop futures. So those slides into harvest haven't been smooth. A lot of times they've been interrupted with some dry weather and later in the season. And here we sit almost July the 1st. So we've got about 45, as it sits, about 45 days till the August crop report for the USDA, and there won't even be infield enumeration with that one. Again, they did away with that for budget purposes, et cetera. So the first infield enumerated measured number that we'll have is in the September crop report, which is 45, add 30 to it, 75 days away. And so
ways away, right?
Yeah. So we were dry, exceedingly dry. Last week got some rains, Cristobal and whatever came in. And are sitting okay now, but there is a good ways to go yet, so we shall see, I guess, where the markets go. But again, as far as feed grains go in particular, and corn futures, not uncommon at all to see that slide begin. In some years, it actually began in late May. One thing that'll come into play this time around will be the next week, Tuesday, I believe, is the acreage report. The market is projecting traders, and we do pre-report polls, whereas the USDA in their prospective plannings report had estimated just under 97 million acres of corn to be planted. Markets looking at on an average guess, I guess, about 95.2 million, a range of 93 to 97. The 97 being, that we got everything in, but others lower. So. Anymore, I think we learned last year that pre-report expectations of what the USDA will show in any of these things are, that's a tough way to make a living, because if anything, we have had a pattern through last year in particular, and ahead of that, of the USDA not lowering numbers as much as the market thought maybe they ought to, given what they observed in the field. Sometimes those changes have come later once they've had more evidence. But here we have, and this is a big report, the USDA acreage report following on the heels 3 months later of the March prospective plantings, and this number, whatever they come out with on Tuesday, will be used by the USDA almost literally, I think, all the way through the September, October crop report. So it's a quote big deal. There'll also be a stocks report, and really for stocks report, the main thing we wonder on with those has to do with feed usage, especially on the feed grain side, and especially this year for corn. So we'll be watching for that too. But we have a pretty good handle on exports from the weekly numbers, even ethanol feed grain usage on that too. So on the feed grains, we'll be looking to see if livestock feeding is held up, and we'll be looking at things on the margin, I guess, and on soybeans and wheat. Maybe some wheat feeding, but gosh, with all the cheap feed grains around, you would think we wouldn't have that much wheat feeding at this time.
Well, that round of new numbers from the USDA, again, this coming Tuesday. Speaking of exports, as you give the overview of this, you say, Dan, that corn and wheat have had a pretty good run of it of late again, while the soybean exports are flagging some.
Yes. For the week ending June the 18th, the numbers that came out yesterday morning, we had about 52 million bushels of corn export sales. And for that week, and that we need just under 50 to meet the USDA's projection. So gosh, anymore when you meet the USDA's projection, that's a pretty good thing. Grain sorghum's continued its up and down move here. Last week had a great week. This week, kind of half of that, about 4 million bushels. I got about 8 the week before, but that's kind of the normal game, I think, in terms of grain sorghum exports. They're blocky and chunky. For wheat, overall 26 million bushels. We need a pace of about 18 with USDA's projection. And of course, we're just early in the marketing year, but that's a good sign. For hard red, interesting, what we grow here in Kansas, we had 11.5 million bushels of shipments for the week ending June the 18th. We need a pace of about 7 to meet the USDA. Well, the USDA hasn't put out their regular projection yet, but if we assume the same thing as last year, about 370 million bushels worth of hard red winter wheat exports out of the U.S., well, gosh, that's a great week. And it's just interesting to me that you know, we're looking at futures being weak and in different sectors, et cetera. And of course, wheat has come down too, but arguably, you know, we're in harvest, creeping up from the southern part of Kansas all the way through, and the reports we get, et cetera, they've kind of brought about the mindset of, well, okay, we're doing decently, but we're not diving off lower on prices. And actually the basis levels in the central part of the state are very good. I think historically good. They're not great big positive carries, but positive levels, but they're still very good overall. So here we're in the midst of harvest and not the worst of days in the wheat market. I would also say on the soybean side, weak soybean exports at this time. So week in hand, week shipments, about 11 million bushels for the week ending June the 18th. But with 10 weeks left in the marketing year, again, about 80%, about 19% of the way to go, where we have literally 100% of the USDA's projection already bought ahead. That stuff can shift around, et cetera. So with action like that, how come the soybean market isn't just, you know, going much stronger? I think it has to do with political uncertainty between U.S. and China, and all other issues that would come in. I still, you know, Eric, you and I have talked about this for a while. Brazil has a bunch of problems in terms of COVID-19, and they kind of took a laissez-faire approach to dealing with that. And so far, it hasn't affected their shipments, but they're having problems. So, but I think that's always something to watch, and could offer a surprise in coming weeks if they just have shortfalls and can't keep up the pace of as they get to the end of this shipment year that they're in.
Well, Dan, you mentioned the relatively firm wheat basis at local delivery points around Kansas. How much of that has to do with the export business that you just described, or what else is driving that, if anything?
I think it's exports. I think that's primarily it. That we, you know, we're not just as we just talked about. You know, these are healthy levels. If you need a pace of about 7 million bushels to meet the USDA, about the same pace as last year, and here you had a week where you're at 11.5 million, you know, what is that? That's 50-60% higher than what you need. So that's all for the good. And you know, if this hypothesis I'm bringing out, it really holds true, then you've got the question of, well, what about the basis levels? Look out to western Kansas. We're in the midst of harvest. A place like Ulysses, Syracuse, 25 under. You know, in the midst of a big harvest, a lot of times we'd be 40, 50 under, and they'd be turning away trucks and, you know, and giving a really negative signal. So that's not too bad. And when you look at the central part of the state for wheat, again, Atchison, Topeka, Concordia, 10, 20 under, Salina, 5 under, 10 under in Hutchinson, Wellington, 18 under, Great Bend at 12 under July. So interesting. Note also, though, that this is under July. We're going to roll over into that next contract into September. And so when we roll to the September contract, I think if we keep the same carry in the market and the price levels cash about the same, well, we're probably going to gain about 8 cents on our basis. It's going to be 8 cents worse looking, just because we're just about to roll those local basis bids onto the new September contract, and we'll see where that goes.
Nonetheless, this is appealing in as far as marketing opportunities for wheat producers. It gives them at least some flexibility in what to do as they head to town with the new harvest.
Appealing in that it's well, appealing for them would be $6 wheat, Eric.
Right.
But
Sure,
it's not as discouraging as it could be, is maybe how I'd view it. You know, it's not completely falling apart. We're not approaching loan rates by any stretch and holding up decently. So if people do need to move wheat because of cash flow purposes, they're not completely on the defensive, perhaps.
Well, again, we'll be looking ahead to next week's visit as we'll go over those USDA numbers on crop acreage and the stocks. And Dan, of course, has captured everything to do with the markets as he's observed them in his weekly notes, which can be found now at agmanager.info. So producers, be sure to take advantage of that information. And Dan, as always, many thanks to you.
Thanks, Eric. Take care.
Our weekly visit with K-State Research and Extension grain market economist Dan O'Brien. He's along with us each Friday on Agriculture Today.